How much is that doggy in the window? The one with the waggly tail. Well, hello. Gonna kind of put my money where my mouth is. And a warm welcome to one and all. And for those of you who have not seen me before, I am the overgrown child. That is the Scruffy Trader. What I'm kind of doing today is backing up something that I told the Discord group this morning, but also following up from a live stream that I did yesterday, because I discussed the full rules of a push strategy. Simple strategy that gets good, quick results, and it's pretty consistent. And the only way I know how to be fair is trade it in real time. So that's kind of what I'm going to do today, and it's the basis of today's video. So if that sounds good, please smash the like, click the little subscribe button. Genuinely helps, but more importantly, motivates me to do more of this. So what I'm going to do is I'm going to fire up the screens. I'll tell you a little bit about what I'm looking at. Talking of things that I like to look at. Whoa.
Coffee.
You have caused confusion and delay, and terrible trouble to my trousers.
Makes my day every day, that girl. Do you know, she could really make my day.
No, there's no gold bikini.
I never said a word. I was going to say a bacon sandwich. Ha ha
No,
ha.
you win.
Ha ha.
You win.
Sorry, boys and girls. This is real life. Nothing is ever scripted here. The videos are normally driven by either an email I get in or something I've been discussing on Discord. And that's it. There's no scripts. It's just me on the camera and showing you what I do on a day-to-day basis, which is normally asked about. My toys. Some people like it, some people don't, but personally I don't give a toss. I really don't.
Are you serious?
Anyway, let me fire up the screens and I'll show you what we're looking at.
Well, we're waiting.
Okay. So this is cable. It's a 15-minute chart. Now earlier on this morning, just so you can kind of see what it is that I'm driving at and that it's not anything, I did an overview of cable this morning. That was done, what time was that? 9:30 this morning, and it's now 10:30. And I explained what I think is going to happen with it today. Now yesterday in the live streams, which was here, oh, I haven't put it in yet. Oh, bugger. Where's it at? Live stream. There we are. Update from the live stream. Push. So that was done yesterday. So what you're seeing is kind of spoke about well in advance, because the one thing I don't believe in is rolling back a chart. There's nothing wrong with looking at historical data for an idea and just to sort of show some examples, but if you're going to categorically put your head on the block and say I did this, it should be in real time. Too many roll back trading view and then use the replay. I don't do that. I don't believe in it. So what are we looking at here? Okay guys, sorry about that. As usual, the phone rings at the wrong time. No shock what's on my ringtone. But this is actually set up. And why is that? Well, as I was saying, I like to do this real time. Now the idea is to push over the top of the 8, come back and tag it, which it has. It has stayed off. You can see daylight between there. I'm in a zone, and now it's moving up. So I'm going to put an order at the top of this. Now, because this is just really an example of what can be done. I'm not going to go gun-ho. We're just going to drop an order in like so, which is 5, and then I'm going to put another one in just to see if we can, well, maybe get 10-15 pips. There we go. All right. Now I'm being a little bit conservative with the next target, and the reason being is there's a roadblock in the way. All right, this is a 5-minute chart. Now this could easily come back on itself down onto this level. It's just nature of the game. I'm going to put that down there so it's in the exact same place. But the idea behind this is using the 8 as a barometer. What I mean by that is if the price is on one side, that's where you're going. But you needed to add a couple of extra layers into it. And those couple of extra layers, for me, it's always going to be levels. Levels are key. Or zones as you are looking at this moment in time. But also the 50. And as you saw, I kind of got an idea from the hour. It's confirmed on the 15-minute, and I'm now trading it on a 5-minute. And the general idea of this trade is to basically be in and out. Now, it's tagged me in, maybe it's a little bit early. It's left one of the orders behind, which is actually a good thing at this moment in time because it could actually get me out of trouble if this goes wrong. And why is that? Because I can follow the price. All right. But the idea behind the trade is simple. It's using a couple of moving averages to just get an idea of direction. But you need to read through all of your time frames. So overall, I believe this is to the long side. And the one thing I do believe in, and you might have heard me say this before, if you get the direction right, it'll forgive a bad entry. And the reason being is, yes, because markets breathe, they move, they breathe in, they breathe out, they breathe in, they breathe out. Nothing goes in a single direction forever. Eventually, it's got to come back on itself. And those little reprieves can get you out of danger if you know how to buy in back into the market at the right time. Something what Scruffy Madness is, and if you look at some of the other videos, you'll have seen it. But with this, why is it targeted the way that it is? Well, it's because we've got a roadblock here. There it is. Now, this one here is a little bit ambitious at 15 for a short time frame. For the entire day, fair enough. But why is it targeted roughly where it is? It's because of this cluster here. Yeah, if this is going to pulse up, push down, and then move up again, it's kind of around this area. If you look to measure it out, just as a rough idea of what's going on, if you can imagine that is the move, which is there, it's now starting again, which is there. So if it does the same again, its maximum is kind of up here, and you're giving yourself a little bit of grace. It's kind of the idea. It's just a rough eye shot of where the market may well go to. The problem I have with this one is this. This might hold the price back for quite a while. Why? Because it's a strong level. So what I'll do is I'll just let the camera run out. Brought the second one in. It's only gone against us at the moment, maybe it's about 4 pips, 4 ticks, points, whatever you want to call them. It's now running into profit. Happy days. Okay, and it's as simple as that, guys. So I'll just let this play out. We'll see what happens. I may pull this into risk-free once it closes in that zone. Reason being, it has a good opportunity to come back on itself. If it does, don't really want to be caught in it. And it's another reason why you stay consistent. Just be safety conscious with your trades. I know there's a lot of people say let them breathe, one thing and another. No, I would rather be stopped out and re-enter than sit in mega heat if I see it coming. Don't get me wrong, I don't mind sitting in heat and I'll buy into it in one thing and another, but that's only as part of a plan. Something like this, if I see it coming back on myself, kill it, wait, re-enter. I'm not sitting in heat. So I'll come back to you when the second, oh, well actually, this might actually pop out the first order while we're looking at it. Alright, maybe not. How annoying is that? See what I mean about it's holding back the price. It's gone into it and holding it. Anyway, I'll just let the trade play out and I'll come back at the end. Okay guys, bit of an interesting situation really. The dynamics have changed. As I said, this could well pull back into my zones, which it's done. It's kind of made the moving averages a bit null and void at this moment in time. So what I'm going to do is I'm going to take them off and I'm going to trade this. So I'm going to put another couple of orders in at the top of the zone there. Place one there and another one in the same place. There we go. And what we're going to do is I'm going to drop that one down to 10 pips. And we're going to see what happens, because another part of trading, it's not all about having one tool in your tool bag. You need multiple tools, because the markets, as I was trying to say earlier on, they live and they breathe, and they breathe constantly, and you need to kind of be a little bit prepared for that. You know, that's, again, it's kind of tagged me in a bit early. I wanted to push straight up, you know, wallop. So why have I entered the market the way I have? It's because of the aggressive drop. Very, very simple. It's come down. When a market moves that rapidly, the moving averages can't keep up with it. So you've got to kind of stick. I just take them off because they'll confuse the situation. And then I'm dropping to a zone-to-zone setup, which is kind of what you see me do most of the time anyway. And looking on this side, again, it's multi-time frame, looking from the top to the bottom. My belief is still long, so what I started with at the beginning is still there. It comes back to what I was saying to the guys in the Discord group. And now we're just going to run this one out and see if it'll run up. If it does, result. What I'm going to do is I'm going to put that, for all I set it at 75, just on that zone. When this one closes out, I'll pull this into break even and then just see if it runs up. So it's kind of 2 in 1 today, if you like. The idea of these is, well, it's just showing you that trading's not really mechanical. It is living, breathing. You've got to be a little bit intuitive with what you're doing. And when opportunities arise, as they have here, you just capitalize on them. So I'll speed it up again and I'll come back to you at the end. And that was that, guys. It's gone into target. Result. It was, well, it's done pretty much what I wanted it to do. We started with a push strategy and it pushed its way out. As I said, this had a good chance of coming back on itself. It's Monday, so it was a high probability that it would do that. And, well, Scruffy Madness took over, got us out of trouble, and paid us in the process. Result. Can't really get it any better than that. And that's all trading is. It is just looking at probabilities, trying to get to a decent return for as limited a risk as you can. But when you're talking about risk, it becomes a hot potato subject, because some say you should have tight stops, some say you should have wide stops. I'm kind of somewhere in the middle. I do have a relatively wide stop, but when it moves into Scruffy Madness, the stop actually is really small because it's hidden behind another zone. And as the price comes down closer to the stop, your risk reward increases, because as you've just sort of seen, the targets are still up on the high end, so the risk on the last one is minimal, but the target is pretty good, and that kind of gets us out of danger. So I hope all of that kind of makes sense for you. It's, I don't like trading on a Monday, I really don't, because the markets are erratic, and it's because the money flow is coming in. Sometimes it can be a little bit harder to judge than, say, on a Tuesday, Wednesday, Thursday, which is when I prefer to sort of trade. But I am a big believer that if I open my mouth, I should put my head on the block and at least trade.
Good job.
Oops, sorry guys, forgot to show you the figures. Let me flash that on and I'll carry on having a little chat. Okay, there you go. Not bad for an afternoon's bit of work. So let me carry on rattling on. Well, it's kind of my theory. Put my teeth back in. My theory behind it anyway. So there we go. I'm going to enjoy the rest of the afternoon. The sun's out. Beautiful blue sky here in Durham. So I'm going to go for a wander with my best friend Winky. So.
Okay. Well, the mind's an amazing organ.
I've got an amazing organ.
It's capable of far more than you'd imagine.
Right again.
Trade well. Keep your risk managed. But above all, do what you love. And the money will follow. See you all in the next one.